imagine having confidence in every single business decision that you make, and you know what's going to happen because you've kind of got a crystal ball in front of you in regards to what's going to happen, how things are going to play out. Well, that's kind of what we look at in this episode with Sukhy Bansal. She is a fractional CFO who has worked very closely with me, with quite a number of our clients we've got inside Profitable Provider, and help them develop strategy around their finances so they have the data to make amazing decisions. Please check this out, enjoy it, because this is a conversation we had while I was there recently in Parramatta. I met her in Sydney, in the city, and it was a great way to be able to just find out more about how she works, what it looks like, and how she's helped so many of our guys with Profitable Provider to be able to get so much clarity on the decisions that they make. Check it out.
Sukhy, you've got a line that really stopped me that I read in one of your posts because I think it was really common for a lot of people, which was there was heaps of cash, but the business still felt tight. How has that played across some of the business that you've seen where they go, there's heaps of revenue, but we just can't afford to do anything? What does that look like for a business?
Yeah, so it's quite a common theme I see across all different sizes of businesses, all industries, to be honest. But what I meant by that line is that they don't have the transparency around, They haven't assigned a purpose to that cash or that revenue. And I use them interchangeably, but they're not. The cash flow of the business is the lifeline of the business. And a lot of the time they can be doing really well is from a revenue and profitability perspective, but they might have a massive debtors owed, money owed to them. And as a reflection of that, the revenue might look really great on paper, but that money hasn't really translated into cash in the bank yet.
Yeah.
Or they might have...
That's a lot.
That's a lot, yeah. Or they might have debt, ATO, debt liabilities that really requires them to sit on that, and that all goes through the balance sheet as opposed to the profit or loss. So again, there can be a difference a lot of the time between cash and revenue or profit. And it's one of the things I see over and over again. Yeah.
I know that when I've looked at clients' zero accounts,
Yeah.
and we've hit that little button to change the profit and loss from accrual to cash, and I go, this just means here's what you've invoiced and it looks amazing, and then cash is here's what you've collected, and they go, oh.
Yeah, exactly. And yeah, so for me, just getting business owners in the habit of knowing the ins and outs from a cash perspective, and having that cash flow forecast, which is not too difficult to put together, but it's the habit of being able to forecast your obligations ahead of time so that when you get to that 2-3 months, you're not panicking to scramble money to pay off your liabilities or to try and collect money from participants or clients that you suddenly realize that haven't paid you for 30 days.
Yeah, 100%. Sukhy, you are a fractional CFO. Can you give me a bit of a rundown on what that actually looks like?
Yeah, so it's a terminology that I guess has a bit of a corporate feel to it, and I didn't intend it to be that way, but I do feel like it sums up what I do quite well. However, the fractional part of it is really, most businesses that I work with in the SME space don't need a full-time CFO. They don't need the cost of a full-time CFO. So the fractional side of business, an American term that's sort of caught on here, but it's really coming into a business and working at the fraction of the cost, a fraction of the time, but still delivering that CFO support to a business. And then when I dissect that into, okay, what is CFO support? It's more forward-looking analysis for businesses. It's working alongside the accountants and the bookkeepers, so we all work together.
So you're not going to do my BAS, is that right?
I'm not going to do your BAS,
all right,
although I have
enough.
great people who can do your BAS, but that's not the area that I specialize in. But it's not so much the compliance side of things. It's, okay, this is where we are at this point in time. How do we get to where you want to be in 5 years or 10 years, and start to break that down and put legs behind the goals and start to track whether you're getting closer to where you want to be, and really assign a purpose to what you want to do with that profit. What the business is the vehicle to get you somewhere personally. What is that? So create that drive.
The personal trainer for finances in a business.
Yes, I like that. Yeah, exactly. Hold people accountable to their goals and motivate them, and then also look at the business. I think the difference with the CFO role is you also look at the business very holistically. So it's not just the numbers. The numbers are often a symptom of something else that might not be working well in the business, maybe on the operations side, maybe the systems, the people. So it's identifying where that root cause is, and either helping them or getting experts in who can help them,
Yep.
and then seeing that translate into the goals and KPIs we have for the business. Yeah.
How did you end up as a fractional CFO working in a nice little office here in Sydney? But not just that, you work really hands-on with businesses all over Australia, and obviously a lot inside the care sector with NDIS providers, care providers. You've come and spoken at one of our summits before. What
Yeah.
got you into that space? How'd you end up there?
Again, I naturally fell into it after I finished up in corporate 7 years ago. So after I had my last baby, who's now 7, I actually was made redundant from one of the banks, big banks here that I worked for just across the road. And I name many names. And at the time, obviously, it was a bit of a shock for me, and the corporate ladder was all I knew. But I also had that urge to create something of my own. And maybe that's inbuilt in me from my dad, my brother, my grandfather all have their own businesses. And so I just went out looking to the leave that I had after I'd had a sergeant. I had a bit of a runway because of the redundancy. And so I just started going out to, I'm lucky where in Sydney there's so many business events. And so I started going to the Chamber of Commerce evenings or different business evenings and just talking to people. What are your pain points when it comes to finances? And
Love that.
some of them were like, you don't know where we're going next year. I think we need a forecast. I'm like, yeah, I can do that.
I can help you with that.
Yeah, that's really what it was like for the first couple of years. It was just saying yes to different opportunities and then seeing where it would take me. And then I just cultivated this fractional CFO title because I felt like it encompassed everything I wanted to do.
So good.
Yeah.
It's a different type of finance for a business, because a lot of businesses look at it and go, yeah, I need an accountant, I need a bookkeeper, and that's good. And I've got a great accountant. Most accountants I find are really good at highlighting the problem, not helping you put a plan in to solve the problem.
Yeah.
You've got to fix that. And that's really where you come in.
Yeah,
it's like
exactly.
you're creating that. Yeah, we have the numbers.
Yes.
Now let's formulate the way out.
The way out, yeah. And helping to identify a potential problem before it is the actual problem.
Yeah.
So that's where you and I are quite aligned with scorecards and dashboards because they're real-time reporting. They tell you in real time rather than after the fact at the end of the financial year, oh, you have a massive hole here. It's in real time. Okay, you're in the red for how many weeks in a row? There's a problem. There's a problem in your organization, and whether it's a people metric, operational, no matter what the KPI is. But like I said, I think having a good accountant is really key because there's tax strategies you should be aware of. And so I'm learning from the accountants too and helping my clients find the right accountants for them so we can all support them together. Yeah.
So good.
Yeah.
Why do you think that some people really shy away from the finances of their business? Do you think it's a not understanding thing, a fear thing? Do you think it's maybe for some people a cultural thing? Like, where have you seen that come up?
All of the above.
All of the above?
All of the above.
Okay.
And it's funny you say that. I was talking to somebody recently and we were thinking about different, not so much boxes, but different mindsets clients fit into.
Yeah.
And some of the fear might come from the way that they saw money being handled when they were younger in their family dynamic. Some might be they've been in a business before and potentially been burned or it hasn't gone well and they've taken that fear into the next business. Others just want to close their eyes, dig their head in the sand and just operate like a sole trader for the rest of their life, even though they're a company corporation. So I think the first thing is obviously mindset, because I can educate people as much as I want around the tools that they need. But there's, again, like a personal trainer analogy, you know what machines to use at the gym and you know what you should be eating at home and you know how much you should be.
Hang on. I know. I just, whether or not I'm actually doing it is a whole different
That's the thing. So it's finding the motivation behind it, like why they should be doing it. And that's the bit I like to, and I'm really mindful of spending more time on with clients is before going into this is what you need in place. It's like why they're in the position that they're in right now and how do we change some of those habits and how do we create something to motivate them to get that business to where they want it to be.
Yeah, I love that.
Yeah.
We've had an opportunity to work with a few clients at the same time.
Yeah.
So we've got quite a few clients
We
who,
do, yeah.
who work with me in the business side and you in the finance side. And I can say that for those guys that have really lent in, they're going from where they've gone from terrible to great, and they've stepped in with you and just gone to the next level in regards to where they now see opportunity, where they see the possibilities ahead of them, because now they have that visibility
Yeah.
And that planning on their financial side has
Yep.
just been absolutely phenomenal.
Yeah.
And then we get to really play in that fun zone of like, where do you want this business to go?
Yeah.
I love
Yeah,
that.
and that is fun. Yeah.
Yeah.
And it's giving them, I think, a lot of the time, it's just giving them that confidence. Like some business owners will say to me, "We're not good with numbers." I'm like, "You actually are. You actually, even though you might not know, you might not want to look at the spreadsheet roughly the profitability of each of your still houses are. Mentally, they've grown the business from the bottom up and they understand how it operates. And for me, it's coming in and giving them that confidence to say, the numbers are actually good. You're doing a good job, but if we tweak this, you could be doing even better, that sort of thing.
Love that.
Yeah.
So when a business owner comes to you and things are broken, what does that actually look like? On Monday morning, when they open up their Xero account through their pays, whatever, what are they feeling? What's the reason that they actually go, I need some help?
One of them simply is that they don't have the money in the account to make payroll for that week or that fortnight. The second is the accountant's just given them a payable BAS amount or an income tax notice of assessment, and they don't know where they're going to get the cash to pay it. Yeah. Another one might be they're going for finance, or they want to buy some sort of an asset in their business like a motor vehicle, and they just don't know whether they can afford it. They don't know, they might need some more people in the business, but they don't know whether they can afford them. They're often times when they're often the questions I'll get initially when, for example, if I do a financial health check for them, they're the sort of areas we'll look into straight away to sort of see how have you done and what are the areas to improve so you can actually, what do you need in the business to take it to that next level. So, you might need to invest in 3 new people on your leadership or operations team, or 2 new people, or more service delivery managers or an ops manager. Yes, it might be tight for a bit, but you can sustain it. And I can't magically give them cash, but I can say, okay, let's do a forecast.
Yeah.
And this is why it's beneficial for you, because we can see that, yes, you can afford to pay this tax bill in 2 months' time if you cut down on your spending in here.
In an area over here.
Yeah, or you reduce your subscriptions because you don't need 5,000 subscriptions. So there's little tweaks.
Every April 1st, April Fool's Day,
Oh, yeah.
I look at all of my subscriptions because I decided I don't want to be a fool for another year.
That's a good idea. Yeah. Yeah.
So I can swing it for a year, but do I really need that
Do
subscription
you need it?
again?
Yeah. And it adds up. Like
It really does
It's
add up, really.
finding little pockets and wins.
I remember promising myself I would never pay for Foxtel, and now I pay more for 5 different streaming services
yeah.
than I ever would have for Foxtel.
There you go.
What is the biggest lie that business owners tell themselves about their finances?
Okay, so there's 2 buckets of people.
Okay.
The ones that are overly pessimistic and the ones that are overly optimistic.
Oh, okay.
Yeah,
All right,
and
cool.
I have both. So the pessimistic ones are everything's doom and gloom. As I said, they're running it like owner-operated, just like a very small business, but in fact, it's making very decent revenue a lot of the times, over 7 figures. But they're so pessimistic in, oh, we don't have the right people around us, or we'll never make money because the NDA are always changing things and we're price takers. The narrative is very negative all the time. This came out in the news, which means it's really bad for us. It's the story that they tell themselves. And often they're the people that I don't necessarily work with because they often don't see the value in having a CFO. And to be honest, it has to work both ways. I don't really want to work with them if they don't see the value in what I do. My sweet spot is I do the optimistic business owners that might be spending, they don't have enough cash, but they have that growth mindset.
Yeah.
And they just go and they're on a call with me, and there's one person I'm thinking of in particular, like, I want to do this and I want to do this. So I really like that ambition.
That sounds a little bit like me, but
Yeah,
anyway.
it does actually. And although it's not I don't want to put a damper on their enthusiasm, but I come in with a bit more of the structure and say, okay, let's plan, and what does that look like? And let's maybe do one of those initiatives, and let's put some measurements and KPIs around it, see if it's working, and let's go from there. So I don't know if that answered your question.
No,
but
it 100% does, because I learned from my coach that you're really either a maker or a manager.
Yeah.
Right? And the maker is the creative who kind of goes, we're going to do this, we're going to take this ground, we're going to build this over here. And the manager is kind of going, yeah, so let's look at the numbers on that and just make sure we have the plan in place. We can do that, but let's do that in 6 months. And I think that if you have both sides, and particularly in the care space, a lot of people are really driven by this creative idea to be able to go and make new pathways and that sort of thing. But as you mentioned, there's the optimist and the pessimist
Yeah.
here when we look at it. And some people can be like, you know what? This is a war of attrition. We're gonna care so much that we make so much money, and that's not exactly true. But also, people shy away from investment because they just see it as spending. And something you mentioned before was like, we want to do this thing, but we want to make sure we have the cash to be able to sustain it. It becomes an investment as opposed to we're going to spend money on this thing.
Yeah.
I love that. That's
Yeah,
really fun.
exactly. Yeah.
You talk about having a 12-week rolling cash flow forecast, and that's a lot of words that all string together really nicely.
Yeah.
It can be one of those things that people have. I talk to people who have a business plan, and it's this awesome bit of paperwork they did up that they never ever look at. Right?
Yeah.
So what does a 12-week rolling cash flow forecast look like, and how do you use it in the day-to-day?
Yeah. So it is a lot of words. And really all it is, it's a projection of where you think your cash is going to be in 3 months' time.
Yeah.
That's all it is. So it's a way of capturing all the ins and all the outs that are going to be going to and from your bank account over the course of 3 months, which we split into weeks, hence the 12 weeks. So the first step, and which is probably the most valuable step, and where I see a lot of kind of aha moments from clients, is working out, okay, this is everything that comes out of your bank account on a weekly basis or on a monthly basis. And a lot of the times, oh, I didn't know we had that direct debit, or I didn't know we were still paying for that subscription, or we had that contractor that was on so this much. And it's getting a really good handle on what are all the expenses in the business, so all the payments that are coming out. And then the flip side of that is, rather than looking at when you're invoicing clients, like when are they paying you? And that's the cash coming into the business, right? That's the green, that's the money and so it's having a look and saying, you invoiced these participants 20, 30 days ago, but when are we seeing the cash actually land in the account? Or in some cases, and I will say a lot of the clients that I work with, their data management is quite good, which is great. But even, okay, so what are we forecasting? If we're forecasting to grow in the PBS space, for example, okay, when do we expect these new clients to come on board? When do we get invoiced them, and when's that money going to be paid? 7 days? Is it 14 days? So putting some numbers around that, around the cash side, that's the cash inflow. And then really all the forecast is doing is taking your opening balance. So say, for example, we started a forecast for the beginning of July. So we'll take the opening balance, your bank balance. So you look at your CBA or Bankwest or NAB account, look at the opening balance, put in all the forecasted income, cash you expect to be paid, and then put in all your cash payments. And by that, I also mean your wages, I mean your tax bills from TO.
So just really quickly, you're saying that a business owner should be paying themselves wages?
Oh, yeah. And we can spend another topic on that. Yeah, absolutely.
That might be a whole nother podcast.
Yeah, and it might be drawings, depending on the structure, but it's making sure you account for, did you know you're taking out $200 every week from the business on groceries? Or it's like accounting for all of that, because that's why a lot of the time they're like, where did the cash go? So it's really knowing, like, having that transparency around the ins and outs. And so that's all it is, taking the opening balance, putting in all your cash receipts, cash payments, and then you get a projected closing balance. And when you say, how can business owners use that, at the end of the month, particularly in the beginning, we come back to that closing balance and look at the actual and say, okay, were we far off, and what happened? And if we are far off, okay, what's happening? Like, our assumptions are wrong.
Did we get coffees from the machine, or did we go and buy coffees
did we
all the
spend
time?
too much here, or did we not get this money that we expected to come in? More importantly, do we not get paid, or have we got these loan accounts that we just don't know about, and that sort of thing. And so what it does is it gives clients the confidence as well to plan for things. To say that December-January period, which is quite a quiet period for some of my clients who are in the trades as well, it gives them confidence to say, okay, we can still afford to pay wages even though the work has slowed down, because we've got this buffer in our cash account. So it's an empowering tool, but in the beginning it's very much just providing just insight into, do you know all the ins and outs of your account? It's a very long-winded way of explaining cash flow forecast.
But you also said something really important there, which was cash flow buffer, right?
Oh, yeah.
And it's one of the things that I encourage all the guys I work with is to have a buffer. And if they're in a particular service delivery space, it should be X depending on their business. And they're in supported independent living, it should be much higher and that sort of thing. I see it as a warm blanket.
Yeah,
Right, just
yeah, it's a
having that,
safety net.
that
Yep.
safety net of
Yep.
having that cash flow, that safety net of cash. What to someone who maybe doesn't have that, they're going, how do I pay guys this month, sort of thing. What's the best way for them to start building a cash flow buffer?
Yeah. So I'd say the best way is to just start putting some money aside every month outside of the main business operating account into a savings account or into some sort of another tranche within your world, whoever you bank with, so that you obviously can see it, but it's tucked away. You forget that it's there. And even something as small as $100 a week, $200 a week, $500 a week, a lot of the time as clients grow, we'll work out percentages for them. So I'll work with clients to say, okay, at the end of every month, we're going to transfer 10% to this account, which is your tax account that we keep building for your tax liabilities. We're going to put this money aside into your profit account, so you can play around with that at the end of every quarter.
There's the play money.
It's play money. And when I say play, it's what we spoke about. It's like you can either choose to, at the end of the year, take it out as a dividend if you're a company, or you can invest it back in the business because you put that money, you've assigned a purpose to it. So the best way to get started is to just get into that habit of putting some money aside into a separate account. So there's no temptation to keep using it. And I'd say as a kind of rule of thumb, most businesses should at least work up to having 3 months worth of fixed expenses. So that's money you have to pay regardless of your business activity in a separate account, which is where a lot of businesses got caught out in COVID time. They still had rent, they still had insurance, they still had people on salaries that to keep paying. So knowing your fixed expenses, having 3 months worth of that monthly expense tucked away for a rainy day or a COVID or pandemic is something that I definitely recommend.
And for everybody listening, if you're not sure on fixed expenses, go to your profit and loss. You look at everything where it says overheads, it's that chunk there.
Yeah.
The bottom half of your statement, right?
Yeah.
And those things that come out every month regardless of whether you have work or not.
Your work cover, all those expenses that if you have 0 clients tomorrow, you still have to keep paying.
As I said, we work with a few clients together, and you work with a lot of people even outside of the care space, which I think is fantastic because if you're only inside the care space, you've only got one reference point. Right? The business is business. Can you give me like a aha moment or a bit of an idea of someone you've worked with and just the bit of the journey they went on and where things really clicked for them?
Yeah. So like you said, there's different industries that I work with, although my passion is the NDIS space and allied healthcare. But as I mentioned before, some of the trades, I have to find they need help with managing and staying on top of their finances and sort of.
It's a similar sort of space though, because a lot of the guys are operators who grow into a business.
100%, They've got a skill set and they've got a passion for what they do, but then it's another world when they're now operating at a level that is a decent turnover and they have a good number of staff working for them and the profitability is there, but they just don't know how to juggle everything. He's in the concreting industry, a client of mine that we did an initial financial health check for them, which is usually the first, I guess, reference point or way that I start working with clients, because it helps me to diagnose, where they are and what is working well, what definitely needs improvement and where the opportunities lie. And so he came to me with, Sukhy, we just don't know. We don't know what we don't know. We think we're doing well, but to your point, the cash, we're always scrambling for cash when it comes to tax time, or we're not even paying ourselves. My wife's the bookkeeper. I'm on the tools. I don't have any time to do anything to work
exactly there
on the business. And so you can relate. So then the aha moment for him was, I'm like, okay, let's do a financial health check and he was the business was doing well turnover wise, $6-7 million business, but the business was spreading itself very thin. So it was doing commercial work as well as residential work, and he didn't know what was more profitable. And they had so many, and so this was part of the financial health check where, and I've spoken to you about this before, and this applies very much to NDIS clients as well, it's knowing your profitability per service line. And in this case, it was knowing the profitability for each of the customers that he worked for, these big real estates or these big building companies like your Mirvacs, Creative Homes. It's knowing with those clients, like which one are actually bringing you the most margin, like where is your time and investment and money and staff well spent. And so the same thing applies to NDIS businesses, where I found a lot of clients or people I come across, they've spread themselves very thin. They're doing all the things. They've got the 20 still houses, they've got obviously community access, but a lot of the time I found my advice or what comes out of the health check is a lot of your profitability is coming from just a handful of things that you were doing or contracts that you have in this concretist case. And so that was an aha moment for him. He was like losing money on some of the residential smaller clients. So the aha for him was to maybe focus his efforts a little bit more on working with the bigger groups and showing him that if he was to put somebody else in an operations or in the operations space, that would free up his time to go and do more of the business development and go and get the referral partners. And so that was a live case, which that gave him a lot of confidence to be like, okay, now I know a bit more about my direction. It's not just in a business plan. I know what I need to go and do. And with NDIS clients, it's the same thing. And I'm doing this a lot at the moment for my clients, is looking at each of their still houses and saying, okay, this is the one you're making great money on. Why is this doing so well? Like, why is the profitability so high here? How have you structured it? What works well versus this one that we're bleeding cash? You know, and getting them to that transparency. And so is it better off having 5 really profitable still houses than 20 with only 5 performing well, and you still having to pay all the overheads and payroll tax and, you know, for shift care workers? Does that answer your question?
That's awesome. So let's look finally at say 3 different businesses, right? All in the care sector. Someone doing perhaps under $1 million, someone doing maybe around 5-6 million, and someone maybe doing 20 or so, right? For each stage, and it might be the same, I don't know, should they be looking at to help them understand their position and getting really clear on what their next decision-making process will be?
Yeah, good question.
Big question.
Yeah, there are some overarching similarities for each of those brackets. I'd say for the sub 1 mil clients, the biggest thing for them is just firstly just having that transparency around what does their profit and loss look like where are they spending money. So a lot of the time those businesses, they've grown quite quickly and then maybe lost a bit of control around the numbers or around the spend, and they have no idea what's going on with the balance sheet either. So sometimes they've had to fund their growth as well. So a couple of clients, they have massive finance loans, so they're bleeding money, paying interest, really high interest rates. So sometimes with those clients, it's just going in and fixing some really obvious things. So getting them in touch with a great broker, refinancing their loans so that they save some money from a cash flow perspective there, and then get them on the pathway to knowing what's happening with their cash. Because that's one of the biggest reasons most businesses fail. It's not because they're not doing well revenue-wise, they just don't have the cash, like we've spoken about. They become insolvent. That's the first thing with the under 1 mil clients. And the second is, it's really just education, like financial education, and it's teaching them some of the basics that you should be putting away money here. You should invest in a good bookkeeper and an accounting system as well. And you should have a great accountant around you. So it's bringing in the right people to support them and giving them insights into that they might not have ever seen before.
A good proactive accountant and bookkeeper will make a massive difference.
Yep, 100%, yep.
What about those businesses in that middle bracket? Maybe it's around the $4 or $5 million.
Yeah, so that I see as more of that growth stage. And so they're starting to feel the growing pains now. They've established that they've got a great business idea and they're great at what they do and they get the referrals, but they're trying to keep up with the pace of growth. And those businesses, a lot of the time, I find it's the operator or the owner, the founder, who's wearing all the hats. So that's the space I love, because that's the time where I come in and again, the health check is probably the first thing that gives me insight into how the business is run. But often I find maybe the systems are outdated. They need to be managing their payroll a bit better. There's lots of errors there, or in some of the trades businesses, they have to have a job management tool that they're able to track the profitability of their jobs. So systems, and then a big part of that growth stage, that bracket, is having the right people around them, realizing that they can't do everything by themselves, and they need, for example, they need an operations office, operations manager or a GM to come in and take away the day-to-day activities that the owner's involved in and let them step up. And I guess from a mindset perspective, that stage is very much about letting go a little bit, getting the founders to let go and what's the word? Not be so controlling over every single
that's
thing.
fair, yes.
And it's really hard for sometimes because they're very passionate about what they do, but it's being able to say, okay, this person, we're paying them a 100K salary, they should be managing the problems and rather than running to the founder all the time. So
Did you hear that? Did you hear that? Okay. Yeah. Yes.
And then at that stage, yes, there is a lot of spend because you're investing in the right things, and it's giving. So a lot of my role there is also to give the business owners confidence that yes, you can afford to do this. You can afford to get a better system to manage your still houses. Yeah. You can afford to hire somebody else to come in and assist. You can afford to offshore some of the back office things. You don't have to don't be afraid of spending. So a lot of the time, the profitability doesn't always go up at that stage.
Yep.
Sometimes it stays flat or even drops because the business is heavily investing into the right things and systematizing stuff. And then when we get to that next bracket, which I'd say is more about scale, I think the biggest thing there, what I find there, the goal is to really, depending on what the business's long-term plans are. If I'm working with a business that wants to sell, they're at that level and they're ready to sell in 5 years' time, it's getting the business ready for sale. Yeah. So it's making sure that you are showing strong profit, not being afraid to pay tax. Tax isn't always a bad thing. If somebody wants to buy your business, they want to see strong profitability. Yeah. And it's making sure that the business can run without the operator there. So a lot of the time it's a test for that is, can the owner go away on a 3 or 4 week holiday without everything falling apart? Is the owner able to, at that stage they often need an in-house, either finance manager or financial controller. So a lot of the times I will help them with the recruitment of that because they'll say, Sue, can you come and work for us? I'm like, I'd love to, but but I can help you find the right, so work out from a finance piece who are the right people. They might just need a really good management accountant. But at that stage, they need more than just an offshore bookkeeper. They need somebody sitting there and giving them the insights, in real time because they need to make quick decisions.
Sukhy's financial officer recruitment has just launched.
Yeah. Why not?
But, having someone like yourself actually find that right person, not just go...
Yeah, and I love to do that because I think a lot of the time the candidates can look really good on paper, but if I've been working with an organization for a while, you want the values to align. And so at that stage in business, it's not just about finding the people with the right skill set. It's like, are they going to grow? Are they going to scale with the business? And maybe do they have the potential to become that general manager and, take over things so that the founder has that space to oftentimes go out and start another business or branch out of the NDIS, because a lot of the times they are very entrepreneurial. Obviously, they've grown a business to that level, and it's what can that founder do without having to be tied to the business? Can it just run and they can go and work on their innovative ideas?
That's where fun starts to happen. We've seen a lot of providers get to that sort of between 10 to 20 mil mark, and it's where they can provide everything's in the right place, step out, be more creative again, become... When I say the word influencer, I don't mean like, TikTok influencer. Actually influencing what happens in the community, what happens in local government, having the right conversations in the right room with the right people. And they start to connect at a different level and launch programs and things. But without the right financial base, the business is not going to run.
They often have really good business acumen and they know how to run one business. They can run other businesses because it's making sure you're good with the people side of things. That's one of the key things, not having to do everything yourself. So I really love that space too, but it's working with people that, again, that have that growth mindset, to have like CFOs and other advisors and coaches around them to get them to that level.
Awesome. Thank you so much for chatting with me today.
Thank you. So nice.
How does someone reach out and have a conversation with you around maybe just doing that financial health chat?
Obviously reach out to me on LinkedIn or my email address, or there's an inquiry form on my website, or reach out to Paul and he'll give you my details. But always more than happy to have a conversation if I can help in any way. Even if the timing isn't right, at some point people come back when the timing is right. But yeah, I'm always willing to just share as much as I can. And there's some free tools that will help you along the way, then share them with you as well. So yeah.
Awesome. Thank you so much.
Thanks, Paul. Thank
No
you.
worries.